Good evening. Everybody had a bullish view on Nifty, so did I. But couple of setups that happened during the market hours, I had to change the view from bullish to bearish, and that is when this tweet came during the market hours. Bullish view only above 18,860. Below 18,860 will take a bearish to sideways view. This is the tweet which I posted during the market hours while I was trading. Why did I say what I said? Why did I change? How did I change my view from bullish to bearish? Let's find out what setup I was looking at during the market hours to change my view. Now, if I drop down to a lower time frame, which is like a 15-minute chart, right? What happened was here, the market, this was the high which came from yesterday or 2 days back. Market touched here, which was 18,872, and there was a sharp dip. Again, market touched, tried to make a new high. Again, there was a dip. This candle is where a lot of things changed today. These two candles in terms of price action, because this was a resistance area which was sitting at 18,870. It broke out during that candle but could not sustain. Any resistance that breaks out during the market task but doesn't sustain came back and closed lower below the resistance area. Not once. It happened once, it happened second time. So when the markets are making a new high, trying to make a new high compared to yesterday, I would want RSI also to make a new high, but RSI was not making a new high. It was finding constant resistances around 60 levels. So this gave me a clue that this market may not go further higher because of lack of momentum and there was a bull trap in the market. So these two things is what probably pulled the market down. Having said this, what is that we could expect tomorrow and day after tomorrow? Anyways, the bank nifty view was obviously bearish because of couple of setups that we are looking at. What is in store for tomorrow? Let's find out. If I look at the daily charts, Nifty is relatively strong because price is constantly finding support the short-term moving average. No doubts we are back to short-term moving average. If by chance market drops below the short-term moving average, there is definitely further sell-off in the market. To add to this bearish candle, what we have right now in terms of RSI is multiple divergences, not one, three, four. Maybe this is four or five divergences that I am seeing in the market. So what I would probably do is rather than taking a bearish position, I cannot immediately take a bearish position because of price staying above this. I cannot be bullish given the divergences and momentum loss in the RSI levels and a bearish candle back to back. Two bearish candles we got in the last 2 days. Last 4 days, two bearish candles. So momentum losses in RSI, bearish candle, and Bank Nifty is not looking good. Anyways, we are holding on to Bank Nifty bearish view. So these two is telling me that the candlestick pattern and the divergence is telling me that the momentum is lost on the upside. Now we are very close to all-time high. Should I take a risk of going long on the dips? Any small dips should I go long here? Given the divergences, given the momentum loss, I would say no. I would refrain myself from taking any long position. It may not be immediate short, but at least long positions I will start liquidating. Having said that, if I go to lower time frame and I said 860, 18,860 and below, if you see this tweet, 18,860 and below, I would hold on to a bearish to sideways view. Why 18,860? When the market went up from here, from the support area that I was expecting, went up. So that if the divergences have to be true, the bearish divergence which I explained few minutes back, if it has to be true, divergence basically means that this momentum is lost and we could expect some kind of a correction, either a time correction or a price correction. One of those things can be expected. So I was expecting a price correction, provided if this rally is lower than the previous high, for which I at least should have the market below 880 levels. So I was thinking that around 860 levels where this market would make a top and then a sell off. So I was expecting a minimum lower high because of divergences and momentum loss I saw on the 15-minute chart earlier. This one. This was the reason why I said 860 may not cross. Now, what is this going to happen? Since buying is out of question, there is a kind of a small head and shoulder pattern that is seen in the 15-minute chart. Now, if the market doesn't go above this, which is around 18,820 or worst case 18,060, if the market cannot get back above 820 or 860, we would probably see one more sell off towards 18,650, 660 levels. Is it going to be immediate? Is it going to be smooth? No, it will not be smooth because Nifty is relatively strong in terms of daily chart. So it will probably test your patience on the selling side also. Definitely buying is definitely, I would refrain from buying given the divergences. So what I say, probably I'll wait for little more clarity on Nifty to initiate any short position. I will definitely wait for a long position. Now, where would this up move could stop? Probably around 18,820, or worst case 18,060. So this will become a resistance window for me. So any up move, stop short, you will test this. If market breaks 760, you will test somewhere around this area. So I would say I would probably align myself to short on rally on Nifty very cautiously because of daily chart strength. I would be very cautiously short on rally on Nifty. I cannot look at options data because option data is pretty immature. But nonetheless, if I have to analyze whatever immature data that we have seen humongous rating in the call side today at around 18,800. So 18,800 callers have taken positions home. So that will they will definitely defend their 18,800 call positions tomorrow if at all there is a rally. So 18,800 from the data per se, or 18,830, 840 from the technical per se should be a resistance zone for the market. If any struggle there, I would probably align myself to very cautiously short on the Nifty. Having said this, what is happening with Bank Nifty? Anyways, Bank Nifty, we were bearish. If you're following us on YouTube, on every video that I have posted, I kept telling that if this up move, if I go to an hourly chart, 2 days back, I had put up a video saying that if this rally doesn't go above 44,000, this will be a lower high in an hourly chart. So I can clearly see a lower high, lower low structure. And as long as the market doesn't get back above 44,000, I will hold on to a bearish to sideways view. My target would be around 43,400. That is what I'm expecting in Bank Nifty. Bank Nifty is clearly bearish. Looking at hourly chart, not only hourly, if I take a look at the daily chart here, I have lower high structure even on the daily chart. This was the first high, then the lower high, then the lower high, then the lower high, then lower high. So clearly, it is the fifth lower high in daily chart with this momentum loss in terms of RSI divergence is also seen. So most likely Bank Nifty will not break 44,000. If at all there is any rally towards 44,000, that offers a very excellent shorting opportunity. Bank Nifty, no doubts, it is certainly or clearly bearish. If I have to look at, few people have requested to also take a look at FinNifty. So what is FinNifty? FinNifty more or less is replica of Bank Nifty, more or less, not actually. Now, if you see this resistance, today what happened? FinNifty tried to break the resistance, could not sustain, even though there was intraday breakout. It closed lower. This becomes a bull trap. Bull trap meaning you break the resistance but cannot sustain. That is a recipe of a bull trap. With the bull trap, with the shooting star formation on the candlesticks, along with that, multiple bearish divergences and RSI struggling to get back above this red line, and also RSI 60 is a perfect recipe for a momentum loss, right? More or less, I would not be bullish on any of these counters. Is there any shorting opportunity? I think not much because we are again RSI 40 usually finds support area. So any rally and any struggle to get back above 19,630 or 670 is where I would probably think of any shorting position. But at least long positions, we have to be very, very careful from here on, looking at the divergences, right? So here is what the summary of what I want to say. Nifty may see some recovery in the first half. Why I'm saying may see recovery in the first half? Because if you are following me constantly, I had told on an hourly chart, every time price came to this long-term moving average, there has been a bounce. And now we are right there at the same thing, right? So there is a possibility of small up move and then we will have to retract from there. So possibility of small up move because of this long-term moving average on the daily, on the hourly, and a short-term moving average on a hourly chart may give a small bounce tomorrow. So may see a first half, but if the rally cannot get back above 18,860, then we could expect some sell-off. So the support is 650 because if market breaks today's low, we could probably next expect 650 to be the support area. 18,860 is a clear resistance, which it did not break today. Bank Nifty lower rise structure is clearly seen in hourly and daily chart. 44,000 is crucial resistance. As long as the market remains below 44,000, That will be resistance, and we will have to hold on to bearish to sideways view with 43,400 as a immediate target on bank nifty. So longs not very confident, shorts on bank nifty is fine, nifty little more cautious because of the strength in the daily charts. So if you want to keep getting these updates, do follow us on all the social media so that you don't miss any of these. And thank you so much for watching. Bye bye.